Big news for Tesla. The company has just received full self-driving approval coming out of China. Now that opens up obviously a very big market. So let's dive right in and talk about first how the stock is doing and also comparing this news to future growth prospects, the company financials, and taking a look at the 6 key variables that make up the macroeconomic landscape so we can see where the stock is going.
Let's take a look at how Tesla has been doing against the S&P 500 over the past 365 days. We can see there were periods of very strong growth back in 2023, and again, a softening with a lot of variability recently where it has now underperformed both the S&P 500 and some other growth names. But in big picture, as there's times where Tesla goes down, there's definitely with these developments, which I'll cover more in a little bit, the opportunity for the stock to really take off. Now let's take a look at Tesla's key financial variables to evaluate the company under the hood. So over the past 12 months, revenue has increased only 3% and is coming in at $97 billion. Now, although there's been a little bit of a plateau with revenue growth, at the top line, we can expect there's going to be some more opportunities, especially internationally with Tesla, but also in terms of some of the other options Tesla has in the mix in terms of renewable energy sources. So I think this is a very minimal issue in terms of a temporary plateau. Now, net profit came in at $15 billion. That's very healthy in terms of a ratio. And then finally, cash on hand, another important metric to look at, is $29 billion. Although that number is not the biggest in the tech space, it is a very healthy number, and it's a lot that Tesla can leverage in a pinch. So those things yield a very positive picture in terms of Tesla's key financials. First, money supply growth. This leads to inflation, and it's down 1.7% year over year. This is good for keeping inflation down because this means that the inflationary pressure isn't building. Next, current levels of inflation are up 3.8% year over year. This number is higher than desired, and I'll talk about how that impacts monetary policy in a moment. Continued unemployment claims. This metric measures rising unemployment. Continued unemployment claims are up 35% from the economic cycle low, which occurred in June of 2022. This number is very high and means that a recession is likely to occur within the next year because the economy is weak and prone to any kind of shocks. And as we know, there's a lot of things that could be shocks happening both domestically and in the geopolitical arena. Next, the market discount cycle. The market discount cycle is every 3 to 4 years, the market performs poorly due to an alignment of fiscal and monetary policy with the political cycle to either address rising inflationary pressure or allow for rising unemployment rates. Right now, we stand at year 2 in the market discount cycle. Even though a recession is possible, the discount cycle dictates that it's not likely that coordinated actions will be taken that impact the stock market negatively. Now, moving ahead, we see that the major cycle has some red here. Now, what is the major cycle? This is when major world-changing domestic and international conflicts follow a cycle, a predictable one, that begins every 84 and 248 years. Based on where we are right now, we are at year 83 of 84 in the 84-year cycle and year 248 of the major 248-year cycle, which means we are about to enter a major conflict period. A little bit more about that. The major conflict cycle means that wildcard events can occur in the stock market that have not happened in recent history, right? If you thought about 2008 being kind of a wild card, this is more of a bigger wild card picture. Then moving ahead, the S&P 500 valuation, the stock market is currently overvalued, which means that it's poised for a big drop when the market discount cycle commences. So that's coming down the road soon. But again, we're at year 2. And then finally, rounding out the bases, monetary policy. Currently, it's favorable to the stock market, and interest rates should continue to remain about the same, if not decreasing before the end of the year. And fiscal policy is favorable to the stock market as well due to high levels of government spending.
Before I give my prediction, if you want to learn more about the key cycles that drive the stock market and get stock rankings so you can find the very best opportunities, make sure to click the link down below. Now here's the deal. What is Tesla stock going to be doing into the future? So let's summarize everything. The company has good financials. It has strong future growth prospects as evidenced by this full autonomous deal that's coming over from China. And then also there's a strong macroeconomic environment rounding out the rest of 2024. Now, two other things to consider in the long term. This is a great play because it's not only the electric vehicle market, but there's other renewable energy solutions that Tesla is part of. But in the short term, it is important to note that Tesla will continue to experience some more volatility than some other growth stock names that we like, and also the S&P 500. So it's a strong long-term play if your horizon's a little bit longer, but in the short term, just know that you might underperform or have more volatility than the key indexes. Thanks for watching. Make sure to subscribe, and I'll see you on the next video.